Everyone, my name is Simon Mishevich from Optimized Accountants, and in this video we're going to be talking about the US rental market. Where can you get the most amount of money from your rental? Which state is the best place to invest? Now, before we get into this in detail, if you've got taxes, whether it's in the UK or US, you will want to calculate how much you need to pay and save. And you can do that by visiting our website using our QR code, which is appearing just on your screen right now. So let's look at Zillow rental report for February 2024. And in this report, they said the Zillow rental market data for February 2024 highlights a steady increase in asking rents, which is a good sign for anyone getting into this marketplace. Though the pace is slightly softer compared to the pre-pandemic averages. Despite this, the demand for rentals remains strong, with a rising number of buildings under construction, albeit with rent growth showing no signs of slowing down. And mainly because of this is caused by the hiring of interest rates. People are not willing to buy property right now. It is far cheaper to rent. The Zillow report continues to say local trends indicate variations in asking rents across major metro areas, with some experiencing monthly decreases whilst others see year-over-year rent increases. Notable increases observed in the Providence, Cleveland, Louisville, Hartford, and Cincinnati. However, certain metro areas such as Milwaukee, Austin, and Dallas have witnessed monthly drops in asking prices, which if you think about the north versus the south, that's very much playing a part here, and we'll show you a little bit more detail about that. If you're looking for UK or US tax advice, then feel free to use the code just appearing on the screen. So the Zillow report shows you this is a nice place to stay actually, because you can see the amount of rents that's being charged is now increasing to $1,959 per month. So this is quite a good sign to see where your return on investment might be, cash on cash return. If you look at the annualized change year on year is 3.5%, month on month change is 0.4%. So the month on month is not that significant, but year on year 3.5% is not a bad rate of return at all. Okay, so Zillow, this is the data set for 2024. Which state is best? Have a look at this chart and see which areas that you would like to invest in. Having a year-on-over-year 7.7% increase is not bad at all. You've also got Boston with 6.3%, Chicago at 5.6%. But one thing to keep an eye on is Cleveland, which has got 6.1%. But month on month is increasing by 1.2%. So expect that to kind of increase over the year. Redfin report, again, just two graphs, really interesting to see year on year, where are we going up? If you look at the kind of 12 months, yes, there's been a dip, but there occasionally will be a dip in the marketplace, but it is picking up again. Now that number is slightly different, that 1980.71. If you look at the previous report that we ran, 1959, it's not too dissimilar, but it's just a slight variation there. You can also see year-on-year change, and again, 2.2% is what they're indicating. This is slightly different to the Redfin of 3.5%, but I would say it's still an improvement overall, whichever reports you like to use. Redfin, what did they say about this? The median US asking rent rose by 2.2% over a year to $1,981 in February, the largest gain since January 2023, and increased by 0.9% from a month earlier. Redfin chief economist Daryl Fairweather says, with rates still elevated, many are opting to continue renting, which is buoying rental demand and as a result, rent prices. And I can't see that changing just yet. The Fed have promised to drop the interest rates, but it's not going to be enough for people to be able to afford to buy